Hi, everyone. Welcome back to the latest episode of the Growth Playbook with myself, Kim Clark, and my dad, Alan Beaulieu. Today, we're going to be going through an update on the state of the U.S. economy. There's a lot in the news right now and a lot of different perspectives and angles being shared. And so, my dad has done a lot of research to help clear away the noise and be able to share our perspective of the data, and what the data is telling us and what you should be listening to versus what's being thrown your way. Dad, did I catch that okay?
I think you did a great job on that, and I that's always what we try to do, right? Is cut through the noise, and this is what's going on, so that our listeners and viewers can have a reality to deal with, as opposed to just all that. What the heck is going on?
It's madness.
Right? It makes no sense. So yeah, I'm looking forward to this, Kim. I think we have some basic bullets to go through. So, we're not going to get into some heavy economic theory or anything, but some numbers. And I'm ready to start if you are.
I'm ready. Let's dig in.
All right, let's start with GDP, gross domestic product. That's the big number. That's what comes out in the news and everybody just pays attention to, and they should. Now, the fourth quarter 2025 GDP number, it's an annualized rate, but that's how they always put it out there. So let's deal with it as an annualized rate. I don't see any need to convert it to something else. It came out at 1.4%. That's the annualized growth rate. Let's put that in context, okay? And there are several ways to put it in context, and I'm going to have a little fun here. There's nothing special about 1.4%. It's after the COVID bubble, we've settled down to a little above, a little below this. So that means years of this. You go before COVID, we had some better, some worse years. I mean, this is certainly not extraordinary. When we're told that the economy is hot and maybe even never been hotter, that's certainly not true. As a matter of fact, back in the fourth quarter of 2019, so right before COVID, the economy was growing at 3.4%, not today's 1.4%.
Mm.
So, I mean, it was hot. And back in President Trump's first term in the fourth quarter of 2023, he was at 3.4%. So uh, he has, no, I mean, his was, I said that wrong. 2019 was when President Trump was in office because he
Got
took
it.
office in 17. And after COVID, the peak was 3.4% in the fourth quarter of 23. So excuse me for getting that backward. But in either event, we've had those two previous highs, and today's 1.4%. You can hardly call that hot. That's more
Mm.
like,
Creeping along.
that's right. Isn't this fun? So it's not bad, but neither is it let's get excited. So if I were to give an outlook, I would say that we should expect, because there's some headwinds out there and some things going on, what we've been saying in different episodes, can modest growth, but keep your eyes open because there are some strangers in the closet, and we want to make sure that we're aware of what might be going on. One of the things that was brought up was that inflation, brought up to my attention, was that inflation, prices are down, and we beat inflation and all the rest of that. That's simply not true. We're enjoying disinflation. Now I know you know the term. You've been hearing us talk about disinflation for a long time.
Been around hanging out with economists long enough.
That's right. Yeah. I remember the first time I heard it, I went, what is disinflation? I know deflation, I know inflation, but what is disinflation? Is that when you throw shade on inflation? Is that,
That's very hip of you.
thank you. It's the grandchildren. Uh, the disinflation is when the rate of inflation is slowing down, and that's what we're going through now. Um, Some prices have come down, but I don't want to bore everybody with statistics. But if you go to the Bureau of Labor Statistics, you can look at the Consumer Price Index for 2025 and see that in most areas prices have gone up, and they've gone up in January too. So not only have they gone up for the last 12 months, in January where everybody was excited about it's gone down to 2.3% or whatever, 2.4%, food still went up. Shelter still went up. I mean, there was things like gasoline that went down and some energy costs, but the things that most of us need to live did not go down. It still went up, but at a slightly milder pace in some instances. But for the year, food went up 2.4%, um, which is significant in that if you got a 3% raise, a good portion of that's going to go towards food. And I think that's the thing to keep in mind. Inflation is not beating up on most Americans, but neither is it uh, going down. What the Federal Reserve looks at, which is a PCE, personal consumption expenditure measure, is at 3%, which
Mm,
is notable. It's purchasing, the producer price index is going up. That means that the consumer price index is likely to be going up. The money supply is expanding, which usually means that inflation will be going up. So we find indicators that things will be going up, and it's hard to imagine then a world where we're going to say prices will be going down.
mm,
Bananas may be cheaper one week. That doesn't have anything to do with next week. Um, and consumers need to be aware of that. And businesses need to be aware that the people working for them are going to be facing that kind of pressure, and they are going to be facing more pressure on things that they are buying. Um, Another interesting, significant, perhaps, point is the war in Iran
mm.
and the spike it's caused in oil prices. Oil prices went up significantly when the war started, and they went up by an average in the United States 11 cents a gallon at the pump, which to you and I is, I hate to sound this way, but you and I aren't going to notice it. You know, we may get mildly irritated, but to some people, that's a big deal. And to those people, this is not something to just fluff off. Energy prices going up really makes a difference. So, are they going to continue to go up? Um, Today they stabilized some because the president announced that we will escort oil transport ships through the Strait of Hormuz. We'll figure that out through the strait.
It's a straight.
It's a strait. And that made the world feel better. But as production is being hit in different areas by different people, it's still a function of prices are higher. That's inflationary.
Mm,
All of that was to say prices are not going to be going down, they're going to be going up. So interest rates are not going to be going down. I don't think we're going to get another decline in the near term, and we should expect higher interest rates in the second half of this year. Bang, simple as that. Inflation's with us to stay, and it's not going to go away for quite a while. Now, having said that, let's think about what that means. Inflation's going up, we got to pay more. Inflation's going up, we're going to be facing pressures in our businesses. So some people have been saying there's going to be, because of inflation, a profitless prosperity.
mm.
We've heard that from different
Yep,
places. Could you throw that chart up, please? I think that chart's
I
kind of
can.
fun.
Yep.
Okay, that's profits. So they've climbed a lot over the years since 1980, mid 1980s. Uh, Now, in the early 1980s and late 1970s, there was a significant period of inflation. And you can see that profits went up and they went down a little bit. But in the early 1980s, you see those two gray bars, those vertical bars that are slightly gray. Those were recession years. It was a W recession. We had one recession followed by a longer recession, and profits sagged a little bit. But there was still inflation in the early part of the 1980s, eventually done away with. But in the late 1970s, there was significant inflation, and yet profits went up.
Mm.
That's kind of interesting. Now go to 2010, would you please? And as you do in your mind, you can see that we had inflation that time period is a big discussion, and lots of people talk about inflation that the Fed created, including me. They look at that blue line, which is the profit line, and oh my gosh, they went up. And then in the after COVID, inflation really went up, and we find that the profits also went up. Now, in 2010, there was not the post-COVID type of inflation, but there were inflationary pressures, and overall the CPI was calm, but underneath there were things that consumers would feel. So it wasn't like what we went through post-COVID, but it was simmering. Uh, Interest rates were low. and businesses were profitable. But then afterward, we really got hit by inflation hard, and consumers got hit hard, and businesses had even more profit. So my point being, you go to the 1970s, you go to post-COVID, and you can see that businesses were profitable. You go to a period of time where there is really very mild inflation in some areas, businesses were profitable. What's the common theme here?
Businesses were profitable.
Yeah, there you go. Because they figure it out. I mean, it's as simple as that. They figure it out. And as they figure it out, there's no reason to expect that profitless prosperity will be ubiquitous. There's just no reason for it. Now, you can break this down into financial and non-financial, because if you take, financial companies out of it, how the real world do, you might want to say. Profits went up year over year. Fourth quarter 20, third quarter 25, which is the latest data, to third quarter 24, profits went up. You take manufacturing, profits went up. You take different segments, computers and electronics, profits went up. So there were many segments of the economy where profits did go up. Now profits went down in retail sales. I want to quote the number because it's important. Okay, so I got to look down and quote the number.
Yep.
Retail sales in the third quarter of 24 were $420.9 billion dollars. 420.9 billion. At the third quarter 25, they fell to $402.6 billion. So profits went down. But let me ask you, Kim, if you, as an industry, had still over $400 billion in profit, would you call that profitless prosperity?
Mm, maybe only on a bad day, but not generally speaking.
If you're feeling grumpy and
Yeah,
you just,
stub my toe.
yeah, that's right. So profitless is really not applicable. Some constraints on profits for some companies is probably as far as I would go. Wholesale trade had a some decline. Again, that's inflationary pressures, but overall the industry is still very profitable. It's not like the profits are shrinking at a dramatic pace and on their way to zero. I mean, this is just um, what's the word? Ludicrous.
Mm. It's a good word. Well, and looking forward, I mean, at least the folks that I'm talking with these days, they're optimistic about 2026. They're not feeling that they're going to have a profitless year because of all these varying constraints. The folks that I'm talking to are proactively looking for new ways to go to market to offset any of these potential pressures that they're experiencing out there. So I haven't run into a business owner yet that's feeling like they're going to have a profitless year and there's woe is me, there's nothing I can do about it type mentality.
Yeah, you're right. They're proactive and they're not succumbing to the, oh my gosh, we're just doomed. Let's just give up.
Yeah,
Right.
and the optimism seems stronger right now than it did in 2025. Um, from at least the people that I'm talking with, for whatever, well, I won't say for whatever reason. I'd say a commonality across the clients that I'm talking to is that they felt a little beaten up in 2025 and they refuse to feel that way going through another year. And so they're learning from the lessons of 2025 and applying that to being better and smarter moving forward.
So they adapt, they reset, they overcome. That happens to be a theme in business.
Mm,
And the ones that don't, they die. But guess what's been happening in businesses since the beginning of business? Some adapt, some don't, which means the don'ts die. There's
yeah.
nothing unusual about this. I just I like your clients and what they're thinking. There's no reason anybody listening can't figure out how to maintain their profitability. Their gross margin may go from 40% to 39.7%, but that's still 39.7%, not zero. Come on.
Yeah, and there's things that you can do. I think in our recent episode of recording that you and I had done, we talked about losing the losers and stuff like that, like to protect that margin. Because there is new work out there to be had. And so not just hanging on to lower profitable type business that you have just to keep the top line number high.
Yeah, I agree with you. And as you lose the losers, then the mindset shifts to, all right, how do I get more of the winners?
Hmm.
And that's what you do. You go after the winners. All right, they're a drag. Let's go forward and have some fun. And if you combine those two mindsets, you really are in a good place. Losing the losers will help you bottom line. Going after not whales just because they're whales, but profitable clients will allow you to have a profitable year. 2026 will be a okay year as far as GDP, but for clients and businesses that we're talking about, it can be a good year.
Hmm.
And I don't mean to tire. I mean, we're going to find that it's going to be fun. And in 27, we'll talk about that when we get together with Ryan later and about things to come. But this year, there's nothing to get excited about as far as economic signals, but there's nothing that says the end of the world is near. Tend to the business, and you'll have a good year.
Agreed. I like it. And since you brought up talking with Ryan later on, so that is a workshop, as you know, that you're going to be joining us for. We're going to be helping attendees understand how to use their financials to build a forward-looking view. The model that Ryan has built is helping people, his clients, build out a 5-year revenue forecast, and he has a tool, a proprietary tool that he walks his clients through. And so it'll be fun seeing all of that live and in action the end of the month.
It certainly will. And doesn't he have a cash management discussion as well? And because cash is king,
Yes.
and I know from my years in business that it's easy to squander the cash because your things are going well, and it's easy to hoard the cash because your things aren't going well. Neither one's a mistake. You have to make sure you have sufficient cash for what's ahead, but you have to be spending cash to prepare for what is coming. And so neither hoarding or overspending is the way to go. It's a managed process, and I love that he does that. And
Yeah,
that'll be good.
all I was just gonna add to that, all with the ultimate goal of, I mean, hence the name Independence by Design, understanding the owner's goals long term, and then helping them see that there is that fine balance between your time, your cash, and your wealth. And helping them to every decision is grounded in what those goals are, that he helps them determine what they are and then helps them stay focused on that. Um,
That's I think I'm excited about this, and it's also a perfect setup, in my opinion, for what our next podcast is going to be about, which is entrepreneurs and small business in the United States. Uh, Man, this is an exciting time, and I can't wait for us to talk about it and what's going on. So I think we're going to look around after this one to go, you know what? There's lots of stuff, ghosts and stuff, but let's go forward. And then after we talk about the entrepreneurs, we're gonna look at the different generations and go, we're gonna be okay. We're gonna be more than okay. We're gonna be doing well. We're gonna thank the younger generations for their attitudes.
yeah, I actually recently was reading a brand study that just came out. I'll have to share it over to you. A brand study that came out that based by the generations and the preferences and what they look for in their purchasing behavior and all of that. It was really fascinating, the differences between the generations.
I'd like to see that. I like things that go plop, plop, fizz, fizz. Oh, what a relief it is. And
I'll send you the study. It's in a PowerPoint. You'll enjoy it.
I like jingles that stick in my mind. All
Excellent.
right.
Well, I'm looking forward to our entrepreneurship episode that's coming next after this one. I know we had said in our last episode that we were going to do that one next. But just we felt pertinent. You and I discussed it and felt it pertinent to let's pause on that and let's give an economic update just because there seems to be so much of it in the headlines these days. Other thoughts or closing remarks that you wanted to share on the economy?
If I may, briefly, and I should have touched on, I suppose, the war caused a lot of uncertainty in the stock markets. Don't sell your portfolio would be what you should consider having a discussion with your wealth advisor. Should I, should not sell? They'll probably say don't. You're reacting to bad news. South Korea stock market plunged. The U.S. stock market took a significant hit. At one point, down 1,200 points on the Dow, but it came back, so that only ended down 400. So, I mean, this is a volatile situation, but don't bet your future on that volatility in terms of I better get out. That'll just solidify your loss, or I'll shove a bunch in because it's bound to come back. Talk to your wealth advisor and do not react to the headlines or intuitively or, gee, I have this gut feel. Um, just do that with all this going on. And we move this forward. In my mind, I wanted to move forward because of the war and all that is doing to the stock markets, to oil prices, and to the CPI and all the rest of that. So it seemed like a must.
Agreed, agreed. Very pertinent and needed. And again, for those, if you're looking, we have our friends over at Bellwether. So I know you're recommending they speak with their wealth advisor, and this is certainly something you work very closely with the team over at Bellwether too. So I know that's a firm that you would recommend if they're looking for somebody to reach out to.
Absolutely. Absolutely. They have a excellent firm that listens to people and then operates in a very logical way to produce great results.
Excellent. Well, thank you for bringing all this to today's episode, and I look forward to next week when we get to talk entrepreneurship.
Yes, and you are one of them, so this will be fun.
Exactly. All right, I'll see you next week, Dad.
Bye, daughter.